Ready?
Yes, sir.
All right, welcome back, guys, to episode 23 of the Untold podcast. We have is this our third guest? Yeah, we've had
Yeah, third
Yeah,
guest.
our third guest.
our third guest. He goes by MTLGO on IG. Giovanni, do you mind explaining what you do in a nutshell?
Yeah, sure. So my name is Giovanni Dure. I'm a mortgage specialist with Desjardins. So basically, I help people get financing for their real estate projects.
Nice.
In a nutshell. Yeah.
Cool.
Yeah, so in episode 4, we talked about the importance of a mortgage broker or a mortgage specialist. So people like Giovanni are the key to success in real estate, especially when you start out, because the hardest part is getting financing. Once the financing gets done, then the process gets easier. But even before you go see a specialist, if your credit score is not good, don't go consult Giovanni, because a lot of it has to do with your credit score. A lot of it has to do with what you're able to do. They do miracles, but it starts with your credit score. So a lot of people get screwed over because the credit score doesn't allow them to have the best rates, and that impacts the amount of different products Desjardins or other institutions are able to provide you as well.
Okay, so if your credit score is bad, they're gonna it's basically is it like the interest higher or something?
Yeah, you're high risk.
Yeah, you're higher risk. But I would say that to a certain extent, the credit score, not that it doesn't matter as much, because it's more the credit history, right? So it's more the credit history. Not people kind of have a fixation on like the number, the score. It doesn't really matter as much. I mean, if you're, especially with Desjardins, it might surprise you, but it doesn't affect the rate as much as you would think it does. So we might go into it maybe a little bit more after, but it doesn't affect the rate as much as you would think. Of course, I mean, there's a certain level. Let's say if you have, I made a reel on that. If you have under 600, there's nothing that can be done about you getting a mortgage.
Okay, so people should aim to have at least 600 or more.
680. 680 gets to the table.
680 is like a good score. It's like a good score.
Yeah.
You can get a mortgage on your own.
Yeah.
600 is you would it's hard. I mean, it's hard to if you're it's not gonna work by yourself. You're gonna need someone else that has a good score to back you. Basically be either a co-borrower or a guarantor. Basically.
Yeah, guarantee. Yeah.
So just for people listening who have no idea like what you do, at what stage, let's say you're a first-time home buyer, you're a home buyer in process of buying a home, at what stage do people come see you?
Me personally, I would say the first thing you would need to do is that, right? Because if you come see a mortgage professional, the person is going to tell you what's the maximum amount you can borrow, which is like the most important thing for you to know in order, because a lot of people have had that happen a lot. Like they see, their dream home, and then they call you, and then you have to tell them, look, it's not possible to, for you to either get the house or it's possible. So I think the first step is really to know what you can afford, what the payments are. So I think that, it's either between getting a mortgage professional and a real estate agent. For me, this would be like 1A and 1B, like going to a mortgage professional and getting a good real estate agent if you're a first-time home buyer.
No, I'll give shout to Gio, because Gio's the most important person on your team. You can find a house, your dream can sell your house. But if you can't get the financing for it, you can't pay for the house, it's game over. So the first phone call you have to do is to a mortgage specialist, because like Gio said, people have these high expectations of what they're able to afford. And we're going to see a lot of people in the next couple months, next couple years, who I got to let go of their forever home because they overextended themselves in what they were able to qualify for. So it's important to get the real numbers, especially for people under 35. This is your first job, your second job, etc. You're not making plus 70K a year, depending on your degree. So these payments are going to be consolidated, or 60%, 50% of your payments are going to be going towards your house. So if you can't afford it with 2%, 3% interest rates, what makes you think you'll be able to afford it at 4 or 5, even 6%, depending on your credit score? So that's why it's important for you to make sure that you have all your numbers done, because your real estate agent is there to sell your dream. Your mortgage broker or your mortgage specialist does tell you the truth, and there's a difference.
That's fire.
Yeah, I'm like, damn.
I mean, I still want to say though, like, because the thing is, it's true that there's not a, real estate agents, they kind of have a bad rep because there's I guess, a lot of, not a lot, but there's some bad ones. But if you have a good real estate agent on your team, it makes all the difference. Like me, I can say from my personal experience, I've made my first investment last year, and it was an off-market deal, and it was through my real estate agent, right? Because he was an investor himself, um, you know, doing a lot of prospecting, and that's how I was able to find my first deal. So I think that, a real estate, like some real estate agent, they do sell dreams, but a good one, it's still very, very, very important to like to have still.
Yeah. Could you touch the importance? Because for me, I believe, or I have this opinion, every person should buy a multifamily home first before buying a dream home. Like for me, I was able to buy my first home or my first property at 23, and I was able to acquire one last year. So it's easier for you to get your dream home once you have assets in place because you could put those as collateral. Could you talk about the importance of looking for the multifamily, maybe doing house hacking, and then afterwards going for a dream home afterwards instead of going straight from university to the dream home?
Yeah, so I'll answer that by going with my personal experience, right? So I bought a triplex that I'm like converting into a fourplex right now, and I had my first apartment. I was living in Plateau. I was paying pretty expensive rent, and when I bought the triplex, so I took one. So basically, the house hacking. So I lived in one. I had two tenants, and the difference that I had on my mortgage was less than what I was paying on my for rent for my first apartment in Plateau. So, and also the other thing is that it's easier to qualify, and most people don't know that it's actually easier to qualify for let's say a multi-unit property than that's a single family or a condo because you get rental income. So I mean, I know it's not ideal because I talk to a lot of people, especially a lot of young couples. They want their privacy. And I know it's not like you don't want to go into like maybe a duplex or triplex, have tenants, and like you want to have your own. But the equity that you build by getting that first, even if it's not ideal, you only need to live there. You're not gonna live there. You need to get rid of the idea of the forever home. That's what I think. So keep in mind, you're gonna live there 3-4 years. You're gonna build equity, so your property is gonna get value, and then you can, if you want, get the like the dream home. Even I don't think that exists, but if you can, is really the multifamily is the best way to start. Duplex right now, I mean, let's say you get a duplex, it's hard because the rates are high, the prices are high, so the rental income might not cover everything. So if you can, because the triplex is 10% down instead of 5%, so if you can find a way to save, partner with your family, and get into a triplex, right now it's the best first move someone can make. But if you absolutely, so that's the thing. There's some people that just can't, right? They just can't go into a multifamily because their income is not enough. They can't partner with someone. So if you have to get into the market by getting like, let's say, a smaller condo, like do that, right? So it's levels to it. Like, so I don't want to, so yeah, that's the, hope it answers the question.
No, but I think it's a very valid answer, especially I'll get rid of the stigma. People have to look outside of Montreal for investment opportunities also.
I was about to ask, like, where can someone go look for?
I'll say this: the places in Quebec, you could put $10,000 down, get $600 profit in rental income. I'm not saying it's gonna pay all your life expenses, but if you're able to take $600, pay rent somewhere, and then you pay the difference, you'll be a lot more ahead than certain people who have to pay $2,000, $1,800 in rent as well. So, like Gio said, the important part is finding someplace where you're able to build equity, and then having that equity work for you later on, a couple years down the road.
Exactly.
How far outside of Montreal do you think someone has to go to like find a good deal?
It depends.
Yeah, it depends. I'll say this from personal experience. Like, as you guys know, we have like triplex in like Three Rivers. Three Rivers is a good area to look with. Sherbrooke's another one. Where if you want to go country, there's Shawinigan, that's another one too. But it's all these places where it's a minimum 2-hour road, but the systems in place that you're able to. I invest in the US if I had a visa right away. Because there's places in Dallas where you're able to buy mansions for
Oh my God,
few
guys,
hundred thousand
I
dollars.
see the TikToks like all the time of the real estate in Texas. I'm like, why am I living here? It's
Yeah.
crazy.
Yeah, like
It's
400
a
or
different world
500K
though.
for mansions.
Yeah, literally
Yeah.
mansions.
But I still think it's possible to, even in like within Montreal, it's possible to find good deals. Like me, for example, right? I had my apartment in Plateau, which is like let's say a great neighborhood, and I bought my triplex, soon to be fourplex in Montreal North, which is kind of has I guess a bad rep, but still,
Stigma.
yeah, exactly. There's a stigma. I paid I'll give you the numbers. I paid 459. That was last year, and I refinanced at 600. Like
Hold on,
a
hold
month
on. Let
ago.
me let me let me just tell people the importance of off market deals, because you
Mm,
can't get anything under $500 right, $500,000
yeah,
right now in Montreal
yeah,
North. Even if
yeah,
you get 550, that's a good deal.
yeah,
So at 400,
yeah,
I'll say this: in maybe less than 7 years, placing in Montreal North will be worth $1 million. I have no doubts
yeah,
in my mind that's gonna happen. So if
absolutely.
Gio can say in 6 years, 7 years, he made $600,000 worth of profit plus rental income, why would somebody say, "Well, shit, let me look inside the city, look for people, get into contact with estate planners, get
Hmm.
into contact with financial advisors, and get into contact with divorce attorneys." Three people who can tell you when people are willing to sell, especially with old
Divorce
people.
attorneys?
Oh yeah, people get divorced all the time. And
Yeah,
if you know people need cash, they're willing to take less because they have to settle the case right away. So
It's true.
you have to get into contact with these people, especially like last week I went to go visit an off-market deal. There's this woman who lives in a triplex who wants to get rid of it. Her children don't want to take care of the property. That's where you're able to find these deals, because people are in a time where they want to cash out before the market potentially goes into a down cycle.
Wait, so how does someone actually go find these off-market deals? Like, how do you actually do that?
well, I mean, you could use the same tactics I mean, but you would have to be really motivated as a first-time home buyer. But I know, like, for example, this couple, what they did is that they were living in this neighborhood and they really liked it. So they sent a letter to everyone on their street saying, hey, we're a young couple. We really like this neighborhood. If we're looking to make our first purchase. So
Damn.
basically, like, if you're interested, and they were able to like find a property on that street. So basically off market and get it that way. So
That's
if you're
fire.
motivated, if you like a
Yeah.
neighborhood, let's say you go drive around, you really like that street, that's what that's what they do. They send letters. But if you personalize, I guess your letter, you explain your situation. So that's one way to find it. And like, I guess we can cut
Yeah,
that
Charl.
in.
Yeah.
Carl. Like Carl
Charles, yeah.
said, the divorce attorneys. I mean, that's more because you would need. Because I know, like, let's say real estate agents. Me also, like, I talk to these people to get leads for my business. I don't know how that would apply, let's say, to a first-time home buyer. Like if let's say a divorce lawyer would just send leads that way. Have you tried it? Like, have you tried
Yeah,
to?
because for
Okay.
me, it's special because a lot of the times it's for taxes and for people that have to get it done before like a fiscal year. So
Hmm?
sometimes people want to have to sell their home, but they want to do it in a tax year because they'll make too much money. So a lot of the times is why people they have a settlement case, and both people, let's say if you want 50%, somebody has to leave. So and those are the times where
Okay.
people have to have. Anytime somebody is forced to sell a home, that's when you have to
Mm.
attack. That's what is blood on the street. And for me, a lot of the times, it's the people who hear your problems are the people who are a resource. So I don't care if it's an advisor, I don't care if it's an insurance planner, anybody who
Hmm.
knows your financial situation and knows your assets, those are the people you have to be in contact with. So that when there's an opportunity that comes in the market, they could give you a phone call or they could present those opportunities to you also.
Great,
I have
great
one more
idea.
question. I have one more question about off-market deals. So, like, is it basically that it's just not listed on, like, well, in the
Yeah,
market, I
Sasha, like
guess?
my house was an off-market deal because it was done without any agents and it was just
Okay.
basically through connections.
Yeah,
Like
through the
someone was
person.
selling a house
Yeah.
and you don't have to go through agencies or anything like that.
So there's no like extra
Yeah.
fees, I guess, or like what is the actual benefit that they save? Like, what do they save by doing that?
Well, I'll say from my point of view, off market for me is when it's not listed on the MLS or on Centris. So
Exactly.
when nobody knows
Yeah.
where it is, you still need a broker because you have to make the
Yeah.
transaction go through. You have to sign it. So
Mhm.
you still need a broker, but off market is when nobody knows it's available on the market. You might have certain people that know about it, that you have a private bid, but really off market is when there isn't any pictures available online
Centrist and
and that you could search up, and you could search up the website to see
I think
the actual property.
it's important what you mentioned because me in my transaction, I still had a broker, right? Because it's my broker that found the property through prospecting. And like you said, the difference is that off market, since it's not listed to the public, imagine like last year, there was a lot of overbidding, right? Like bidding wars and all of that. But when you find the property off market, you don't have to go through that because you're talking directly to the
It's
seller
one-on-one.
before it goes to the
Yeah.
market. Exactly. So you're just also avoiding the competition with other potential buyers. So that's a good thing, and you can get it at a much lower price.
Yeah.
Than
And like Gio said, one of the important things about off market is that people don't know the actual value of their home. You know,
Yeah.
the city's gonna give you how much your house appraised for, but the bank and the city have two different appraisals. So the city might say the city valuation is always lower than the bank's valuation.
Way
So, for
lower.
example, if you yeah, a lot lower. If you go to Montreal, you write the address, they'll tell you this house is worth, let's say, for example, $500,000. If you go to the bank, they'll say this house is worth $600,000 or $700,000. The sweet spot where you want to buy is between the two. So, when I normally tell people to cut the bullshit, I'm like, what's your lowest that you'll go down or the highest you're willing to accept? If it's within that range, for me, it's cool because you make money on the equity from the bank's evaluation. Where people get screwed over is when they go over the max evaluation and two times over the city's evaluation, and then they'll say equity is gonna carry me over to make money. You'll have to wait 25 years before you see a dollar coming in your pockets.
Yeah. And there's a quote that says you make the profit when you buy, not when you sell. So it's really important that you get the right price when you're buying. So I tell all my buyers right now to not be emotional, because right now it can be a dangerous time to buy. Like we're gonna address it, but it's always time to purchase. But right now it could be a little bit dangerous because there's a risk to overpay. So it's so important to not be emotional when you're making your bid, when you're making your offer, because like the wizard investor said, if you overpay for a property, especially now we're gonna most likely go into a recession, it's gonna take you a lot of time before you see that equity back. So just remember that the profit you make it when you purchase the home, not when you sell it.
Yeah. On episode 4, we mentioned I mentioned like the neighborhoods I looked for, and Montreal Nord was number 1 on my list. And for me,
Really?
yeah, number 1. Like I love Montreal, and for me, I look for standard gentrification. So when I see bike lanes coming in, when I see new restaurants, new this and that, when I see like I have a thesis where I'm like, okay, well, 3 things I need next to a property of mine is a school or multiple schools, public transportation, and I need a bank. So when they say they don't have any money, there's an ATM always available for them to cash out. So Montreal North for me is one of the neighborhoods that has the stigma that people don't care about. But if you look at the institutional investors, the highest area that buying right now, it's we'll call it Lachine / OK Millen, and then afterwards we'll call it Montreal North. So for me, most people are looking towards Notre Dame. I'm looking towards the East End because that's what the values that come afterwards. So I wanted to know, you coming and buying into Montreal North, was it strategic for you to come into Montreal North? And my second follow-up to that is, can you talk about your process from looking at a property and did you know automatically you want to go and convert to a Fourplex, or was it an opportunity that came later on for you to potentially look to optimize the house afterwards?
Okay. So the first part of the question, why why Montreal North? So me personally, I grew up there. So when I was younger, so I already knew the area, and also the fact that the prices were still lower compared to, like, let's say other areas in Montreal. So that was interesting. And then I have, close friends of mine who are into real estate, and they all push that, Montreal North is really the next I guess up and coming area. So I guess I had good advice on that side. So that's why I chose to go with Montreal North. And one thing that I did, right, when it comes to value add was, I remember when I knew that I wanted to purchase, I started watching a lot of renovation videos, like flips, and just so I could like visualize. So when I, got into a property, like I knew what I wanted, right? So I knew that I wanted something that, but just small renovations, like just aesthetically, like that I could
Yeah.
repaint the walls, like sand the floors, like change the kitchen, bathroom, nothing major. So that's what I was looking at. I was looking at a ton of videos on that. So that's exactly what happened. So when I got into that property, it didn't look good, but I knew that it was only like aesthetics. Like I knew what I could do. Like there was the fourth, basically the I guess that the fact that I'm adding another apartment, there was already a space like made for that.
Yeah.
So in my mind, like when I saw it, it was just perfect because that was exactly what I was looking for. So that's also an advice that I give to my buyers, which is to like visualize, right? Like, because a lot of them, they want something that's already, nice, already good looking, and they have a hard time seeing the potential of what it could be after. And for me, what helped was looking at, let's say, kitchen transformation for under 1,000, like what people can do with just 1,000, like turning something ugly to beautiful. So when I was doing those visits, like I just knew I was seeing the potential. Okay, I could turn this into that by so that's that's basically what I did. Like when I went into the property, I already knew like from the start what I was gonna do to it.
Yeah.
And that's what I recommend to all my buyers.
So is that a big thing for you,
And
like visualization and knowing what you're gonna do before you even do it?
Absolutely,
Yeah.
absolutely. Because the thing is, most people they can't see potential. Like, and I remember when I visited that property with someone in my family, a family member, and they were like why do you want to buy this? Like they couldn't see it. And afterwards, when I just renovated my apartment, the one that I'm in, and also there's another one that I'm renovating right now, and when they came back, they were like, okay, wow, like I didn't see that. So that's the thing. So people, most people, they have a hard time
Hmm.
doing that. So I think when you put your mind, when you like put your mind with all those, I guess, beautiful design, beautiful ideas, it'll make it easier for you to actually see the opportunity.
Yeah, yeah. I feel like a lot
yeah,
of people are guilty of that. Me too. It's like you just want something that's ready to go and like something that
Yeah,
already looks good, like we've been talking about the dream home. But how do you go from switching that, like shifting from that mindset to the other mindset? Is it just understanding the benefits that it's going to give you long term in terms of investment wise and money wise?
yeah. So that's one thing. So you have to understand the benefits, because the thing is, you have to understand that if you're buying something that's already, you're gonna pay the price for that, right? You're
Mm.
not the person that has done the work is, I guess, basically charging you for that. So me, let's say that, like in my personal, situation, when I bought my property, let's say at 459, which was already a good price, but let's say that it was worth it around 520. But with the renovations, I've put in maybe about 30,000 worth of renovations
Mm.
for up to 150 that's in equity that I've. So basically, you're getting that appreciation. You're the one getting it, right? For how can I put this? How can
No,
I
it's basically, it makes sense. It's basically like being a consumer versus a creator. Like you're either
yeah.
buying what someone else did, or you're going to be the one that's going to do it.
the
So
one that's gonna do it?
yeah.
And
There
also
you
and
go.
also recommend to never, I mean, and people, they they may be intimidated by the idea of doing renovations, because like a lot of renovations could go bad. So I always recommend, like, don't, if it's your first time buying something, like don't go into like anything crazy, right, where you have to like change the structure of a property. Like just like something, and there's a lot of properties out there, they just don't look good visually, right? Like you really just maybe have to paint a wall, like you have to change the kitchen, change the bathroom, change the floors. And there's like mortgage products available for you to do that. You know, there's like renovations loan that you can include in your mortgage, which makes it easier. You have like a year to do those renovations, and you can have like basically the property look exactly how you want it. So like people are just intimidated by it. So that's the first part. And then to also change you have to train your mind to see basically what something could be. It's not easy at first. Like you might get into a place and you know it's ugly, but when you train your mind, like I said, when I looked at all those videos, like so when I started visiting properties, it was easy for me to see what it could be because of all those all those I guess videos that I've watched on renovation.
That's fire.
I'll say this: people need to stop watching HGTV, and like Gio said, you have to get on YouTube and like actually see people do like renovations. Because I'm sure Gio knows this. Once you get to a mind where you're able to see it, you're able to go to a property, say this is wrong, this is wrong, this is wrong, this is wrong. You'll know exactly what renovation needs to be done. But what I do is that I say it out loud. So I say the floor's crooked, the wall's not good. So the broker knows that I'm gonna offer less. And it's like we go into the broker's head and the client's head saying that the property isn't good, but these are all cosmetic situations, but you're just aggravating the issue so that you could get a higher discount. Because like Gio said, you don't make money at the sale, you make money at the beginning. So if you're buying it, and a lot of these new homes, they all use the same materials. That's why they have insurance, they have guarantees for you because they know the quality of the home isn't good. So why would you pay an extra amount where you could just get the same materials or higher end materials and pay less, and you build that equity up from the beginning? So I think it's the stigma of, like Gio said, just being there for the groundwork, but that's how investors get paid compared to people who just buy retail homes and they just live there, you know?
But you guys are talking right now about how you make the money when you buy the property, and people are still buying properties right now where it's clearly like not the greatest time. So how do you make sure that if you need to buy right now, or if you're looking to buy right now, how do you make sure that you're getting that price that you feel like you're winning at? Does that make sense?
Well, I mean, if let's say that you're buying 4 units and less, it's comparables. So if you have a great real estate agent, you know, that person is not, you know, going to make you like overbid on a property that, you know, that's not worth that just to get the sale, right? So I would say right now, I mean, if you have to overbid on a property, it's probably not, you probably shouldn't like buy that. Like, I'm sorry to say it, but it's, I know a lot of real estate agent might be mad like hearing this, but it's just, in this market, like there's no reason why you should be overbidding on any properties. But to answer the question, I think like there's no like right or wrong time to buy for most people, because most of the transactions they're like emotional transaction, like you mentioned, you know, it's people divorcing, people like upgrading because their kids are changing schools, whatever. Like there's always going to be transaction, people selling, buying. So like the only thing is you have to do your best to leave emotion out of the transaction as much as possible. Stop seeing it as your dream home. So just when you have your pre-approval, you have your max, you know, what's the maximum amount you can pay, like what are your payments going to be, just stick to that. Like don't go above it, just stick to the numbers that you've discussed with your mortgage professional, and it should be fine.
You know, and I think it's different because like when you work in real estate, like it's easier to like you just know. There's a feeling like you get in your gut and like, I walk in a property, I know I'm stealing, or I walk in a property, I know this is like bullshit. But at the end of the day, not everybody can do that. So like what Gio said in terms of comparables, it's probably the best thing. You take the price is listed at for a complete transaction, you divide it by the square footage of the house or the property, and you do an average about 5 properties. You'll get like a dollar amount. So for whichever property you visit, you do the dollar amount times the square footage. That tells you approximately how much the house should be sold for. If it's over that amount by a significant amount, you know you're already overpaying. So I don't look at by the specs, I look for $1 per square foot. Then I say how much is the rent, and I compare that per $1 per square foot. The rent needs to be higher than the $1 per square foot I'm paying, so that I could go into a property and I know I'm making money. But one of the things in this market to make sure that you're not overbidding is you have to be willing to walk away. Because like Gio said, a lot of people get emotional, and a lot of times it's bidding wars. And I'll give this example. A couple weeks ago, there was a property that was listed, we'll say $75,000 the municipality evaluation. I put $50,000 worth over asking, and I still got the client the offer. So that means somebody put over $50,000 over asking to get a property. But I could have gone put 75 if I knew that was the evaluation of the municipality. I wouldn't have been losing. But like Gio said, I wouldn't have been making money on the buy. My equity would have been even, and then afterward, that's forced appreciation that needs to be done to make money. But at the same time, too, that's where you have to be able to walk away. And instead of having this shotgun mentality saying, I'm going to put a bid on every single house, really be strategic and make sure this is the house that screams this is an opportunity.
Yeah.
And so what are some areas, like you guys mentioned there, like you can still buy in Montreal, right? Like you don't have to necessarily go outside of Montreal. What are some areas that you would recommend specifically? I know we spoke about Montreal North, but are there any other ones too?
Even in and around, not just Montreal, but like Laval, for
Yeah, like not
example,
far
and-
away, you know?
Yeah.
I mean,
Well, I'll let Gio start, and then after I'll get my
yeah,
list.
I would say like the east of Montreal is still pretty like affordable. You know, Pointe aux Trembles, like RDP. You know, like it doesn't have a good rep, but it's, you know, you could find something that's pretty affordable there. Like the east of Montreal, basically. If you want to, I'm not really like familiar with the west and, you know, other side, but I know the east is like Montreal Nord, RDP, Pointe aux Trembles. Those areas are still pretty like affordable.
I'll say this: all these areas need work.
To the rest of Montreal.
There you go.
Yeah,
And I just want to add, all these places in Montreal need renovations. There's no area in Montreal that's so brand new that you can't put any renovations in. Most of these houses are done in the 50s, so like Gio said, and what I look at is I look at which companies are setting up shop. If I know Amazon's got a distribution center, oh baby, I'm investing over there. Because there's two theses I have. I have a thesis that people are gonna want to be close to downtown as possible, and I have this thesis that where people who can't afford Montreal are gonna move outside Montreal, and we're gonna go back to a time where people just work at factories. But instead of factories, they're just gonna be distribution centers. So every time I hear news about Amazon, we saw Walmart is gonna do a distribution center in Vaudreuil. So those are the areas I'm looking for, because those means jobs, and people are gonna move where the jobs available. So for me, all the east end of Montreal is extremely attractive because there's a lot of industrial things happening in the east. LaSalle is attractive if you can get a property under $650. It might be tough, but there's opportunities in LaSalle. And then Laval West, I know there's a lot of land available. There's old people there as well. That may be opportunity. And then Mirabel, Saint Jerome. And if you want to get really like exotic, then like I said, Trois-Rivières, Sherbrooke. But
getting far.
for me, yeah, I go where the money is. But like Gio said, for real, number one, east end of Montreal, that's probably when you get the most bang for your buck. And we're not even at the beginning of the potential it could be. Because as soon as the metro line goes in, game over. Game over. Yeah. Wait, so you want to buy before all the way to Anjou. So there's going to be a blue line that stops at Saint Michel. So it's going to go to Saint Michel, Saint Leonard, and then Anjou. Okay, so anywhere close to Anjou, aka Hochelaga, aka Maisonneuve, aka RDP.
Yeah.
If you're making, that's where you build your equity. So if you're able to have a house that you know you paid less for, and they do the renovations, and then you just wait for the things to come, and then companies are going to set up shop because there's a lot of industrial things coming. That's when you make your money.
Yeah.
So before we get into the interest rates right now and what's going to happen in the future, but how long have you been doing this, and how or why did you get into it?
Good question. So I've been working for Desjardins for 6 years total. the last 3 years I've been a mortgage advisor. So really just the difference with what I do now is the way that I'm compensated, I guess. When I was a mortgage advisor, I was an employee. I didn't have to, find my own clients. I didn't have to, I was just helping people with mortgages. It's kind of same thing that I do now, but really as more like as an employee. But me, I have an entrepreneurial background. Like I've always done a lot of different things, like clothing brands, this, that, online businesses. So I was looking for something that could, like where I could join my experience, like working in the, I guess, banking industry for 6 years and being an entrepreneur. And that was just I guess the logical thing to do, like moving, being a mortgage specialist. So that was the number one reason, right? Where I could being in control of my, the income potential, because it's commission based, right? So there's no limit. That was really attractive. And also I started getting into real estate, seeing the power of real estate, investing. So basically, like I had the opportunity to help people, like my community. That's a big, big thing for me, like get people into real estate with what I do. So that's why I moved into, what I do now, basically.
Makes sense. And with your social media presence, why do you see social media as something that's important to do?
Because because right now everything is about your brand, right? It's about like that's the only thing that's going to be left in a few years is like your personal brand, and social media at the end is like the best way to connect with your, with the customers, with the people, and like build a strong brand. So that's why I think that's why I try to have as much of a presence as possible, because what you want is for people to see you as much as possible, to get to know you, and then eventually, it might not be now, like 1-2 years down the line, when they're ready to make the move, like you want to be the first thing that comes in mind.
Yeah.
Nice. That's not a question, because I know you and Bird went to the agency networking events, and I know it's amazing. I missed it. Can you just talk about the importance of networking, but also going out of your way to be in the right room with the right people?
It's extremely important. Like for me, and that's also another reason why I love doing what I do, is that it forces me, like I actually have to be at those networking events, meeting people, which is something I didn't do before, and I can see the difference, because you never know who you're going to meet. And I've met some amazing people, even if it wasn't like for business, but it's just that the game that you get, and it's sometimes you're in a room with people, you're like I could, like, I could have been, doing anything else, but I'm here, like, and I'm with this person that's like, let's say, a multi-millionaire. And not that it matters, the status, but it's just and you realize how those successful people are so open to help, like freely open to help. And of course, we're talking about branding and putting yourself out there. And even though social media is important, there's still a component of like being on the field and just, making people like, I guess, feel your presence, seeing your face. So this is something that's like number one priority for me, like being outside as much as possible at those networking events.
What was the networking event for? Like real estate, I guess?
Yeah, real estate. Basically, it's like a
Cross-border.
Quebec, Florida real estate event, which is
Okay, cool.
like something that's it's a future project that I'm working on, so it made a lot of sense for me to be there. I know you spoke with Bird on the podcast about that, investing in the US. That's something that we're also working on, like financing, the option of also helping people with the financing part,
Hold on.
which is crucial.
Desjardins gonna finance people to go to the US? Desjardins financing people to go to US, like cross-border banking?
Yeah, there's a
Say word.
in Florida. Yeah.
Say word.
Yeah.
Yo, news to me, man. I only thought that TD and RBC did that, but you see that? Shout out to that.
Well, it's in Florida specifically, to be specific.
Yeah, even better.
And it's only Florida?
Yeah.
Okay.
And so what do you think, because I wanted to get into this, but like the interest rates right now, And where do you see that going? Do you see that stopping anytime soon? Do you still see that increasing? What's going on?
Well, okay.
Because I'm trying to buy a house right now. I'm trying to buy another
You're trying to
property, and
buy?
it's just not the time.
Okay,
Yo,
well,
the time is right now, bro. The time is right now, bro.
I mean, he's right. I mean, if you're ready to purchase, right? Because that's the thing. The time is like whenever you're ready to purchase. So if you have, like, let's say you have your pre-approval, you know how much you can afford, like what the payments are going to be. Like if you lock, because to answer your question, I think there's going to be another rate hike at the end of the year, which should be the last one. We should have like a smaller one, maybe like a 0.25. I'm thinking if it's higher than that, it's crazy, but I wouldn't be surprised. So I'm thinking like 0.25. After that, listen, no one knows, because I'm just going off what they're saying, right? So at the last press conference, they've made it clear that this is not the last one. Like, we're gonna like expect the next one at the end of the year. So I think that's what's gonna happen, even if inflation is slowly coming down. But I think, you shouldn't have a fixation so much. Like, and I get it. Like, there's a lot of hype, there's a lot of articles. It's like you should know about it, but you shouldn't have such a fixation, because it's cyclical, right? It's gonna go up and it's gonna go down. The only factor we don't know is how long it's gonna take. Like, that's the only variable we don't have, is when are the rates gonna come down? No one knows. So I always tell, like, people coming up to me wanting to buy, asking if it's the right time to purchase, like, you should only focus on your situation. So how much you can afford, what are the payments, and lock in a rate as soon as possible. So if you want to purchase, if you lock in a rate, that's going to protect you from the eventual rate increases, right? So it's always about your situation. I don't really like to look at unless you're, that interested in the macro and the like, if you like to have those conversations. But I don't think it should matter whether you should make a purchase or not, especially if you're a first-time home buyer looking to make a first investment. If you're like a big-time real estate investor, like buying, like, 8 units and up, it might be totally different. And I'm not, my focus is really like first-time home buyers and first-time investors, like, say, buying 8 units and less. And I don't think like rates are like that much of a determining factor on if you should buy or not.
So let's say if someone is in no real rush to buy but wants to buy, so you're saying it's better to do it right now than to wait till next year?
Well, if you're not in that's the thing. So if you have the luxury, right, to wait, then yeah, because like I said earlier, right now the danger of buying in this market is the risk that you might overpay. So that's a real risk. So there's ways to, like I said, like that I've recommended to go around it, which is to not, overbid, not be emotional about your purchase, and basically sticking to your pre-approval in which you can afford until you find something that meet those criteria. So definitely you shouldn't like rush it. You shouldn't just shoot and like make a bunch of offers like over asking price. But if you have the luxury to wait, and it's a luxury, like if you can actually wait, it is a luxury. But like I said, most transaction, like most people having to buy, having to sell, it's really because they have to, and a lot of the transaction, it's really what drives the real estate market. Divorces, people dying, like all those life events. It's really what mostly drive the real estate market. It's not like the whole investing side of things.
Yeah. Okay. I just want to add, because just to add more context, like Gio, like my 9 to 5 is like a real estate analyst. And because when I tell you have maybe 3 years max to buy a house at a affordable price, that's what it is. And I don't want to break anybody's bad news. And like Gio knows, the Feds are going to increase the rates in December, guarantee. Now, if they increase the rates, the impacts of that are only felt 6 to 9 months afterwards, which leads us into September 2023, which is the time I'm looking to buy a home. Because a lot of people are going to start seeing the suffocation of the rise of interest rates. And then when banks will come knocking to say, okay, well, it's the renewal time, but your rate's at 7%, you're gonna be forced to buy, forced to renew or forced to sell. So at that point, those are the opportunities. If you have cash on hand, where you could say or drive to your neighborhood of your choice and say, "I'm looking to buy a house. Who's willing to give me the house of my choice?" But at the flip side, so the longer you wait, the more uncertainties on your side, and the more uncertainties on your
Yeah,
side, the more we can make
exactly.
any bold prediction as well. But I'll say for me, if you have the cash on hand, and people are gonna get desperate because they know prices are gonna go down, that's the time to buy.
But
But
do you
for
think
people who is their
that
first time home buyer,
that many people are going to be? That's the thing. It's because what you're saying is, like almost like there's going to be like a crash or. But the thing is, like, do you think that many people are going to be not being, like being able to pay the mortgage?
I don't think it's gonna be as, because the thing is that we need 41 million homes in Canada for everybody to have affordable housing.
Mm-hmm.
So I think there's gonna be a good push of people that are just gonna rent for the rest of their life, and that's okay.
Yeah.
A bunch of condo developments are gonna come, but they're not coming fast enough. But for the person who wants to have a nice home, a backyard, etc., there's only
Mm-hmm.
two options you have. It's either you buy from an old person's home, an old person who's trying to transition out of
Or
that home, or you buy from a young couple who's, like you said, who has too many kids, or they overbought. And those are the only two options that I see available. I'm not saying that we're gonna have a '08 crash because we don't have that
mm-hmm.
much inventory available for that. But
Mm-hmm.
I do think that prices are gonna go down, but inventory is not gonna be available. So you have like an equilibrium where it's gonna be like prices that are at a discount, but so much there's not enough houses available. Prices are gonna go at much of a discount as much as possible. So if you're able to get a house right now,
Yeah.
is a time 9 months with you waiting for that potential correction. If not, then buy a house right now. But if it is, and if it makes a significant difference in your down payments, and then you have the option, or you might have the luxury to wait a bit of time also.
Mm.
I know we talked about the residential, but I want to get into like land acquisition, because if people don't know, there are three banks or three institutions that give financing when you try to buy land. Desjardins is one of them. So, G, I just wanted to know from your point of view, what is the
What
process to acquire
what are
land?
what are the two other ones?
TD, but you have to be a wealth management client, and RBC.
So they finance land with a mortgage.
Yeah.
Okay. Okay. I thought Desjardins was the only one. But
Well, let me say this. I don't. That information hasn't come from somebody who is a regular investor or from somebody who's a regular client. Those are like normally from large investors or people who have multiple investments that have
okay.
access to this type of financing. So I wanted to put that out there.
Okay. Okay. So basically for like the regular, I guess, population, like the regular investors, for the most
Yeah.
part, land financing is, I know it's Desjardins that does that for the most part. So you had a question about land, like land financing?
Yeah, could you just walk through me like the process of like how the underwriting is done? What does it look at? Is it the scope of the project? Is it the land use? Is it how can someone go from I have an idea that I want to purchase land to making well, I don't know if it's building a dream home or if it's making a multifamily new construction. You walk
Mhm.
the average person through that process, and is it worth it buying the land cash or going towards Desjardins and potentially get financing for land?
Well, always better to get financing, right, instead of buying cash. So that's the number one thing. And there's two options, and it's actually much simpler than you might think. So let's say you want to buy the land and you don't have any project, you don't have anything that you want to build on it. Let's say within that same year of you purchasing it. So you could still get a mortgage like any regular property, like 25 years. The only thing is you have to put 20% down because you can't insure a land basically. So but it's the same conditions, same underwriting as you getting a home, a condo, a plex. It's really the same process, the same product. The only thing that you have to know is you have to put 20% down minimum. And the second option is if you're buying the land with all, like, let's say you already have a project to build on it. Right now, there's Desjardins, we only like finance project where you're building a primary residence, or let's say basically like a single family home, right? It's
Okay.
not for like a duplex, right? Like that's commercial. But if you have the project to yourself build a home on that land, then you'd have to go through the process of either you're gonna build it, like finding the contractors, blah blah, all of that, but then it's gonna be divided into different en français on dit débourser, like into different
Yeah. Parts.
I
So
don't know
they
like
give you, they
exactly
distribute the money in two parts.
exactly.
How much money would you realistically say you need to build a 2 or 3 story house?
Well, that's for
That's
me. Man, it depends. Like you would have to. I wouldn't be able to answer that because it depends on like the finishes, the materials. Like it's
mm,
Yeah.
so many
Yeah, because
yeah,
they're
factors.
literally building it from scratch,
yeah.
like every single
Yeah,
thing.
But
exactly.
the average price is between $300,000 if you're trying to buy or try to build a 300,000 square foot house. That's the average, but that's with basic finishes, like
Basically,
Damn.
okay.
basic,
But
basic. But if you go to luxury, then
the land too. Like the land, it
But that's
also
what I'm
depends
saying
on
with the
where you're
land too.
buying. Yeah, so
Yeah.
I
oh
don't
yeah,
think that 300K would include the land because it depends on
no,
how.
no, 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 no.
Yeah,
That's just the build. So
yeah,
all in, you're like at like 800, 700. If you're buying the GMA, yeah, you're at like
yeah.
800.
I know a girl and like
Uh,
it cost her 599K to build her own house. And like it's
Mm.
a nice house, 3 bedrooms, I think two stories. Like it's super, super nice. So
she
maybe
already had the
although
land.
I'm not really sure of the details, but like that was the
Okay.
total cost apparently. Maybe that could have maybe just been for the house, but
Yeah,
it was
probably
like
it was
60K.
probably a new development.
But it looks so nice, and I'm like, so do you think it would be better, like, or if somebody were to come to you and say like, I'm thinking of building a house, would it be more
Hmm.
beneficial for me? Like, what would you tell like a client that asks you this question?
Well, so okay, I've actually had that question asked before, and then once again, it depends. Like it's
Yeah,
almost it really depends on like what you're looking for. Me personally, it's not something that I would do because I don't. But the okay, let's start with like why is it good? Is that you get full like I guess customization. Like you get to build something
yeah,
that
which is so
you want.
desirable. Like
Exactly. For
everyone
some people,
probably wants that.
You need to
exactly.
have the
For
means
more.
for it.
Yeah, you need to have the money for it. But if you do, if you can afford it, if the numbers make sense for you, if the like if and also you have to know what comes with it. It always go like overpriced. It can take longer. Like there's. But if you're comfortable with what comes with it, then sure. It's for me. I don't. It's not something that I find attractive because I like myself. Let's say finding a property that's undervalued and adding value to it instead of
Yeah,
like getting something that's already. But I can understand the appeal of building something, buying something that you build from scratch. I can
Yeah,
understand it.
I just want to add something to you, and I think people should, if people listening and want to contact you, I think people should look to buy a older home with the square footage you want, with big backyards, got everything, get a construction loan or like a financing plus renovation cost with Desjardins.
Hmm.
You basically have the structure yourself, so you take out half the cost, and you're able to design the house with the materials you want. It's gonna cost you half, and plus you have the up to date, or it's easier to make renovations and actually build that equity than if you were to buy something in new construction and we'll have to
Yeah,
wait for the market to adjust afterwards.
exactly. I mean, and also, what? One thing that I realize is that you can try. Like I try to explain to my buyers, like my personal opinion on like why I think it's. I would buy, let's say, a property that's not that good looking and add value to it, but most people they don't really care about that. Some of them they really, and it's fine. Like it's totally fine. Some of them they just want something that's like that's their home for their families for they don't want to maybe get into renovations like, and that's why building getting a construction loan is interesting to them. And I can also like I can help with like all those basically all those projects if let's say you already have a land, you've iterated a land, or like it's you could use that as a cash down to like for actually building your property. So I could basically any type of situation I could help you with the financing. Is just determine to determine like what's right for you because if most people, and it's fine, are not investors, then it's okay. Like it's really a small percentage of people who want to like look at things from the investor perspective, and I think it's fine. So if your project is to build that dream home, like as long as you're not, like I said, being too emotional about it, like you're not going over the budget, over the limit that we've set, on your pre-approval, the payments that you could afford, because there's the risk of like being, they say, house poor. I think that's the expression where most of your money goes to paying a mortgage, and then you're not happy. You're living in prison Duré, like this.
Oh
Your
god.
dream home becomes a jail, and that can happen. So that's why I don't think there's like any wrong necessarily
That's so
purchase. It's
sad.
just that to make sure that you're buying within your limits, within what you can afford. That's the most important thing, and also getting the right mortgage product for basically for your project.
Yeah, I guess I got one last question. Besides not calling you, what is the biggest mistakes first-time home buyers do that you see that's something that's reoccurring?
I'm done.
First time home buyer. So you mean like before they purchase or while they're in the
Yeah,
process?
like throughout the process or before when you look at the application or the profile, like is it the debt to income ratio? Like what's something that
Oh,
needs to be
okay.
done for them to stop making mistakes, for them to be able to qualify for a mortgage?
Man, it's like that those car loans. Like people don't understand like how like terrible it can affect your buying power. And then when I talk to people, they're like, but everybody have car loans. Like it's normal. Like, what do you want me to not have a car? And I guess they underestimate the impact of what a car loan, what a debt can do to your purchasing power. And me, I'm like a solution oriented person. Like when you make them understand, like when let's say I take out that $500 a month car payment, and now your purchasing power went up by 60K. Now they see the difference, and it's like giving them solutions. Maybe like, is there someone in your family that can get this loan while you're buying? Like just still helping them find solutions. But it's crazy, but the biggest thing, stop if it's not like late payments on their credit card that they underestimate, like on those cell phone bills. Like they think since it's just like a cell phone company, it's not going to be. But no, that late payment that you had on your phone bill that you've never paid that went to collections could be the thing stopping you from actually purchasing a home, like stopping you for a whole 2 years because you have to work on your
That's
credit.
so
And so
sad.
it's like, so it's really those two things, like the way people manage, I guess, their money, the loans, and their credit. So it's the biggest thing.
Yeah, I just want to add, if you're looking to buy a house, do not change your job. I know
Yeah.
it might be tough for
Oh
you
god.
to have to endure your job for one more year,
Yeah, that's me.
but
That's me.
switching jobs during the application process is the worst thing you could do.
Worst
You
thing.
need at least 2 years straight.
I haven't experienced that. And I would be. I know it happens. Like I have colleagues that it happens, so I haven't experienced it. But yeah, definitely it's don't, because the thing is you
No,
have to understand it from the
that
bank's
happened to me.
perspective. We look at stability. The bank, they want to see that they're lending the money to someone that's stable, because they're lending you. It's over 25 years, so they, in their mind, like that person, like you have to be able to upkeep, pay this thing for 25 years. So they
Yeah,
want to see stability. So anything that's like not stable in your in your situation, then it's just not definitely not a good look. But if you change, by the way, if you change your job and you stay in the same field, like there's
in the
scenarios where
industry.
it's
Yeah,
okay, in the same industry, in the same type of pay, then you, like you should be fine. You should be fine.
it goes.
So,
Yeah,
but
because
it's not a good idea.
that was the only reason I was able to qualify for a mortgage, and that took a lot of like back and forth with my mortgage broker because it was really with the same industry.
Oh,
But that's something that people have to watch out for. So if you know you want to quit your job, make sure you get
wait.
qualified first, and then afterwards,
Yeah,
and then quit.
exactly. Basically, don't make any big changes while you're in the
Yeah,
process. Like, don't go get a new car. Don't change your job. Don't get any new credit. Don't, like,
no new
just,
credit card.
yeah, just keep things the way they are, and wait till you go through the notary. Make till you sign. Like because until until you go to the notary, you're not an owner yet. That's what people don't understand. You're not an owner until you sign those papers at the notary.
Facts.
So yeah.
Finally, just quickly, how would you deal with, because we're self-employed, like this is me basically, I quit
was
my
gonna ask
job,
the same
now I'm
thing.
self-employed,
Yeah.
and it's like, how does that differ? What tips would you have for me in this situation where it's like, I've had this conversation with them, with the bank, they're saying they want stability, but it's like,
Yeah.
what do I do?
Yeah, I mean, I love the self-employed people. Now I am self-employed. So I mean, the number one thing is, I mean, you can't really get around stability, and stability for the bank is 2 years. Usually, it's like they need to see at least 2 years of, if you're producing income, because then they will use an average. So the only way for you to get around that is like certain industries, like let's say for example me, I switched, but I was already a mortgage advisor as an employee, and then I became. So it's like there's like a continuity there. So even if I am self-employed, it could work. Like there's some people, for example, that are in the tech industry. Let's say they go, they started working and they go to be self-employed. Like the Desjardins has like great products. Like we would say, we know in that industry, anyways, you would make money, right? Like we know it's a great industry. Like the contracts are solid, then they will like. So I guess the industry also matters. But I guess for most self-employed people, there's like the best thing you could do is really to don't declare like a low income just for you to like save on, like think, like plan your project. Let's say you want to purchase a home, so contact a mortgage professional, like that'll tell you exactly what's the income that you would need to be able to qualify for the loan that you need, and then talk to your professional accountant in the way that you're going to declare. So don't like lowball your income. So yeah, 2 years is really the key. That's what you have to remember. Stability is for the bank is 2 years.
So declare minimum. 2 big incomes for 2 years basically, and then after that you go back to.
I mean, after you become an owner, you could do whatever.
You could do whatever you want.
Yeah, let's put it like this.
That. Guys, any more questions for Gio?
I want to ask him the GC.
I have one last question, but this is a selfish question.
Yeah,
I know you have a property in Montreal North and you're converting into a Fourplex. I'm in the same process. So I'm wondering, because I'm probably having the same structure, are you converting the garage into like a studio, or is it something different? And if so, are you planning to do Airbnb, or are you going to do long-term leasing?
Long-term rental. Really great question. Okay. So I guess my triplex was like a triplex with a bachelor. So I don't have a garage. Like it was already set up, like in a way where there was like this space with a closed bedroom, but like no kitchen, no bathroom, and there's also there's the heaters for the water
tank.
the water tank basically. Yeah. So like the space was already set up to be like a I guess a 2.5 you would call it here, like because it has a closed bedroom. So I guess it was a triplex with a bachelor. So it's not like a garage that I'm converting. Like I'm thankful because I don't have to do that much work. Like all I have to do is like a kitchen and add a bathroom and also make the windows bigger. And now for like the Airbnb, the thing is, I'm gonna I'll be done with the renovations in like November. So it'll be like, like the cold season. So I don't know if I want to get into Airbnb in Montreal, like in November or December. I don't know if that's like, so I think I'll probably go the long-term rental way to start, but I'm open to Airbnb. Like I'm curious to see what Airbnb would do in my sector. Like I'm really, really curious to see that. It's just that the timing is I'll have to see, but I'm really thinking about it.
Have you ever done Airbnb?
Me personally, no, I haven't. I haven't done that.
Yeah, I was gonna ask. I was gonna ask the GZ question. Like, would you rather take $500K or have a dinner with GZ, and why?
At this point, I'll take the 500K. That's a no brainer.
So guys, we can ask this to every guest, like
Yeah,
every
this is
guest.
how we're
That's
gonna
a
end our
great-
I'm
podcast.
the only one. I'm the only one that would say take a step with Jay-Z. But
Right
He feels
now,
very
Yeah, man.
at this
strongly
point in
about
your
that.
life, at this point of your life, you'll take the dinner with Jay-Z.
Yeah, you
yo,
already have the
bro,
knowledge.
I don't want to sound disrespectful, but 500K is not gonna get me anywhere.
What?
But I feel like I still gotta wait. I gotta go to work tomorrow, regardless if I
No, I
have
know,
500K in the
of course.
bank.
A million is, I mean, it
Even a
depends on
mil.
your expectations.
Not
It's
even
not
a mil,
obviously
even a mil.
But
you're
if,
not gonna
I meet
retire.
if I meet with Jay-Z after he roasts me for like an hour for not taking the 500K,
No. Listen,
I'm gonna have so
500K.
much,
Nah, you're not gonna have anything.
bro. I'm gonna have so much testosterone after meeting Jay-Z that I can run for president and I'm gonna win.
Listen, put it like this: 500K is like 2 million in real estate. You can leverage like at least 2 million in real
Yeah.
estate with 500K. So it's
Yeah,
like,
you already know what to do, Charl. Like you don't need Jay-Z.
But I know, and I always talk about that I need money. The thing is that the boost that we get from me and Jay-Z is as if like Barry Bonds when he took his steroids. Like I feel like I'm already on 100. I'll be like on 1,000 because I'm like, yo, this motherfucker ate sticky from my ass, and like you witness that, Like for me, I went to business school, but I feel like Jay-Z gave me my business degree, so that's how I feel like it is for me. Because I wouldn't have got into real estate if it wasn't for Jay-Z. But if you make it 2 mil, I take the 2 mil. But if I'm like a mil and I got to pay taxes, I'm like, yo,
that's
I
like
can do it.
500K. That's like 2 million in real estate. For me, like I'd take the dinner with Jay-Z. Like if I'm already rich, because I feel like he probably could help you. Like let's say go from
take
like
it to the
20
next level.
exactly from like
There you
20
go.
million to 100 million.
Yeah.
But not right now. No.
Wow.
We need to find someone that's gonna agree with Charl.
No one.
No, there's
Not even Beyonce going green. It's gonna be me and B.
All right, guys.
Yeah.
Well, I think we'll end on that note. It's
Yeah,
been,
just lastly, like where can tell the audience maybe where
Well,
they
yeah,
can find you. We already
course.
mentioned your
Yeah.
Instagram.
Yeah,
We'll put a link in the bio.
Yeah, sure. Really, the easiest way is Instagram, MTLGO. Also, Facebook for the Facebook people. It's my full name, Giovanni Dure, représentant hypothécaire, and my phone number, of course, 514-686-7206. If you need to call, text.
Oh, that's a fish.
Well, we'll link it down below.
Yeah, for sure. So, guys, thank you very much for watching. We hope you've made it to the end of the episode. If you have and need anything regarding mortgages, go check Gio out. And we hope you've had a good time today.
Thanks for having me.
Yeah,
exactly.
sure.
My first podcast, hopefully not the last.
Let's go.
It was really happy to have it here and now I'll go back and actually watch the full
but
all the full episodes.
No lie,
I'm a fan.
No lie, I think that we should have a real estate panel. You birds and have just a consensus on how people could buy and house hack. So I think it'd be something to look into the future.
I'm down for that. I'm super down for that.
Yeah, you guys can do like a full real estate episode.
It'd be like a cipher.
Yeah, like they come on together and do two people at the same time.
That'd be crazy.
All right.
Hashtag watch the throne.
All right, guys. Thank you so much for watching Untold Gems, and we'll see you next week.
I'm like waiting for him to do it too.
For who? You think Gio's gonna do it?
Yeah.
No. You want me to do it?